Just thinking of Canton Network is a project that is slowly but surely rolled out while the rest of the altcoin market has absolutely seemed to crater on its face. This project has rolled out with the likes of Microsoft, JP Morgan, and DTCC. And today we have an exclusive interview with one of the co-founders. The intricate design of this network can be explained from Shalkafer joining us, veteran crypto, blessing me with a chance to be on the show with you today, Vet. I really appreciate it. Canton Network, funny enough, is the whole market's falling apart right now. It's up in the double digits, volume's going crazy. We got to find out what the heck's going on with this project. So I'm pretty excited for this interview. Shalkafer, if you can, give an introduction to a little bit of your background and how you ended up being involved with the co-founder of one of the most exciting crypto projects out right now.
Yeah, first of all, it's great to be here, and thanks for having me. And yeah, I actually never check the prices, so you're the one who's updating me on what's going on in crypto world. But I've been around in crypto for a while, even before I knew I was in crypto. So in around 2011, I was in university working on research and got interested in this very niche area of cryptography that no one really knew, very few people knew, called zero knowledge proofs and snarks and starks. And there was a professor at the university, Eli Ben Sasson from Starkware, who he was trying to prove to the world that zero knowledge proofs aren't just this theoretical construct, and you can go and actually implement these things, and that they can actually be efficient enough to really run. And so I started working on zero knowledge proofs, and we actually wrote the first kind of general purpose zero knowledge proof library called libsnark that was later used by Zcash, and we introduced the whole space, the whole blockchain space with this concept of how you can scale Bitcoin and get privacy with this technology. So that was kind of my first intro into crypto, and around the same time I was separately just got I don't even remember how I first heard of Bitcoin. But this idea of money that moves over the internet, like the real value moves over the internet, that just seemed right to me. I was very interested in reading the white paper. We were writing hundreds of pages of dense cryptography, and all of a sudden you see this very beautifully simple 9-page white paper, and you can't poke any holes in it. It just works. And like, well, we're overcomplicating things, and this guy comes out of nowhere, and this thing seems to just work. So I got very interested in Bitcoin and tried to buy some around 2012, and it was extremely hard. So I went and partnered with another guy to start the first and biggest Bitcoin exchange in Israel, Bits of Gold. So I was kind of working 2 jobs, 100% each, doing the snark stuff and trying to build a Bitcoin brokerage. That was my first kind of introduction into the space. And we had a kind of different approach than most Bitcoin folks at the time. It was a very small community at the time, but we weren't the crypto anarchists that were kind of fuck the banks. And we said, okay, this is going to be a big thing. We're going to need to work with the regulators. We were actually working on and educating the Department of Treasury in Israel and the anti-money laundering institutions here, and working with the big banks. This was before before the banks started turning a cold shoulder to Bitcoin. So we really got kind of front row seat into how banks work, how government entities work, and that was really the kind of the first introduction into crypto.
Very interesting. Very interesting. Vet, you take it away. I know you got a whole lot of questions. You've been scouring this network since it came out. Vet actually called me the day that he found it on rwa.xyz. Take it away, Vet, because there's a lot to unpack here with what Canton Network is. It's probably going to be a little bit content dense, right? We're going to go into some technicals, but I think it matters for the time frame we're in. We're looking at altcoins with utility having a chance right now. So, Vet, you take it away here, brother, and I'll get the rest of the chats up.
All right. So, like Drew said, this is a project that, me and him have been watching for quite some time now. And a reason being is that it seems to be geared more towards, institutions, banks, and creating the rails for value to move. For me, as an investor, that's the kind of thing I look for, because obviously that is addressing a pain point or an issue that is in the financial markets currently. And obviously you've caught the attention of a lot of these institutions. So can you go into, and I understand that there's some that you can't talk about, but can you go into some of the institutions and some of the banks and organizations that you're currently working with, and anything that you can share with us?
Yeah, first of all, I'll say that from my perspective and my co-founder's perspective, we never saw this as like a dichotomy, as an institutional play. It's more of, we set out to do this. It's been more than a decade now. It's really, scary to say that at this point, but we started this company in 2014 and started the network a few years after that. But our goal was really to build the financial rails of the future. The kind of, people just expect that finance flows, and when you actually look at how things are happening, it's very far from that inside of these institutions. So we all came from public permissionless networks. My co-founders were doing Bitcoin since 2009, 2010, even before me. It was just more of a path of dependency of kind of saying, okay, if you believe these are the financial rails of the future, there are different approaches to take. And if you look at public chains like Ethereum and others went and said, we're starting from this kind of retail base and from the way that it's being done in Bitcoin at the time, and we're going to try to convince the institutions to move to that. And we took a different approach, which was, we're actually going to start from the institutions, see what they need, see what works for them, educate them, get them comfortable with this, and then we will open up. I'll be honest, it took us longer to open up than I would have hoped for. But I don't see this as an institutional play. I see this as a, we call it ALFI. It's not TradFi, it's not DeFi, it's everything. The ultimate goal here is actually to make financial services and products more accessible, more efficient and more accessible to a larger pool of people. But we are playing catch up on the retail side, where all of the others are playing catch up on the institutional side. Mm-hmm. So with that, I mean, there's just so much happening. I don't even have in my head all of the things that are going on, but everyone's probably seen the DTCC announcement. So I mean, DTCC has actually been working in this space for very, very long. They've been around since about 2015, looking at crypto, educating themselves. But this is a big thing for them to get the SEC to issue a no action letter and to say you can actually go and tokenize treasuries on the chain where the legal ledger of record is the chain. That's different even from the money market funds from Biddle and Benji. So that is one thing. And then you have JP Morgan, who's also been around for a long time with the JP Morgan deposit token. I'm very curious to see how it plays out, the stable coins and the deposit tokens over the next few years. Who takes ground where? There's just we have so many companies. There's Broadridge with repo and Eliox with natural gas. We have a company doing life insurance and annuities, which I don't think they've been public about it. But there's iCapital with their IDLT platform. Goldman Sachs has the tokenization platform, HSBC, BNP. So on the institutional side, there is a lot happening right now. Then stable coins, I think that is one of the biggest things that's going to be rolling out over the next few years. If you think about stable coins, the amount of adoption they got with what I consider a bug, which is the radical transparency. You have all these financial players and who are actually moving money between them and collateral, and it's visible to everyone to see. So if that's the level of adoption when we didn't have privacy, then now add on to that it can work just like any type of bank transfer from a privacy perspective. So I think we're going to see a huge uptick in usage of cash-like instruments.
Well, and right out of the gates, we see that support from Circle, massive banks. Like it's been pretty unprecedented seeing Canton's partnerships. Now, I wanted to ask you just essentially, how did these partnerships come about? What are you doing what are these partnerships providing to the network and could potentially take Canton Network over the next few years?
Yeah, I mean, first of all, there's a lot of legwork. We've been working at this for more than a decade, so there are relationships and legwork, and that's no different from any kind of work with institutions. But ultimately, I think if you build a product that solves the problems that people have, then it may take time. It did take time, but people see that. So we have been working with some of these institutions for many years and really tweaking the making sure that we understand their problems, and we were sitting with them day in and day out and with their developers, hearing not just what we thought their problems were, but hearing their real problems as they see it. So these partnerships came from just a lot of sweat and blood, sweat, and tears of sitting with them and understanding their constraints. And there is ultimately a bank. We think about this as like this institution, this big amorphous thing. It's full of people who want to do stuff. They want to move as fast as anyone else wants to move. They're frustrated when they hit compliance and regulation, and the architecture team and the security team and the networking team, and so they're really looking for a solution that is going to let them do things faster, better, cheaper. So that's like, there's no magic way of doing it, but we convince them over time that you can get the best of both worlds. You can actually get the DeFi vision and the composability across applications that you get with public chains, but you can do that in a responsible manner with the level of control that agree with it or don't agree with it. It is the level of control that they need to retain. Yeah, I mean, I have a lot of qualms with a lot of the regulation, but it doesn't matter. It's there. Like, I don't get to choose. Once every few years I go and I vote, but I don't really get to choose what the regulation is. And they have to work with those constraints, and we help them solve that problem. We give them an avenue to do the stuff they want to do in a responsible manner.
Well, and I think that you touched on some important things, value proposition, addressing pain points. And I really think that that's where, Canton has kind of shined is, it sounds like you did the opposite of what a lot of blockchain projects did. A lot of blockchain projects went straight for retail, with the airdrops and the hype and, things like that to try to get adoption, where it sounds like you all went for institutions and went and met with them and said, what is it? What is your pain points? What is it that needs to be addressed? How can we make these assets more liquid? So I want to jump into a little bit about, for people just hearing about Canton, what exactly...
Maybe even before I do want to maybe just address one thing you said. Like, I don't think that it was by design that a lot of the chains went for retail. Like, if I look back to the narrative in 2015 and 2016, everyone was going after the institutions, but I don't think they had the right offering. And it really pained me in 2015 when we were kind of pigeonholed and considered as the private blockchain in the private blockchain space, because we knew that was not what we want to be. So it was kind of offending when all of my friends from Bitcoin and Zcash and were saying, oh, you guys went into the dark side and did the private blockchain. But to be honest, that also helped us, because being kind of seen as that private blockchain, that allowed us from a perception perspective to be able to have these conversations. So I think everyone was after the institutional, but it was really focusing on, again, what they really needed to get that.
Well, and I definitely want to get into the privacy aspect, because I have a question here in a bit. That's I do want to dive into that, because I've seen a lot of back and forth about privacy and things, and it's a huge topic right now. But for people just hearing about Canton, so I know that Canton Network likes to call itself the network of networks. So how is that different from popular blockchains like Ethereum and Solana? In simple terms, how does it let institutions keep things private, connect everything smoothly, follow rules, and run markets 24/7?
Yeah, so when we talk about a network of networks, we're really referring to kind of a set of architectural decisions we made in Canton. So, at the risk of diving a bit into the weeds here, the intention is not to say the network of networks as in, the network of all the other L1s or something like that. It's more of, if you look at how the architecture of Canton itself works, it is a network of networks, which is the same way that I would describe the most successful permissionless network out there is the internet. The the internet is not, we think about it conceptually as one network. I have one browser. I use that browser to connect into this entire network, but it's not actually one network. It's a mesh of a lot of different connections. And the network is this emergent property, or the network of networks. The internet is this emergent property of all of these point-wise connections between different different people. And we get a lot of these questions now about, is Canton permissioned? Is it permissionless? Like, is the internet permissionless? So when I recently moved to Israel, and I needed to activate my Starlink here, and I had to actually KYC with my government ID to activate Starlink in Israel, because that's the regulation here. So my connection to the internet is permissioned. But if that didn't work, I can go to a different fiber company, or I can go to a third company, and then what I do when I'm on the internet is, for most intents and purposes, it's pretty permissionless. But when I log into chase.com, that is permissioned. So when we talk about network of networks, we're really talking about the fundamental architecture where there isn't one piece of state in the entire network. It's not like most public blockchains where you have some piece of data or some piece of state that everyone in the network replicates. And in Canton, the network is kind of point-wise connections between nodes in different ways. And Canton Coin is running on a piece of infrastructure called the Global Synchronizer. Now, the Global Synchronizer has some properties of who are the ones who are running it. But if you don't like that synchronizer, you can route around it. You go to a different synchronizer. So it's this concept of how the consensus and how the network actually forms, where there's no single point of there's no single kind of choke point of the state, where all of the state has to exist in one place. And we talk a lot about privacy, but I think that is one of the most important properties of Canton, from a scalability point of view, is that there is no node in the network that has to hold all of the data for the entire network. And that was something that was fundamental for us from the start. We said, if you need to have some nodes that have all the data, this thing will not scale to a global finance level. So, and we kind of saw that happening with L2s that fracture liquidities and forking of networks and creating new networks in public blockchain space. Every time a network got congested, a new network would come up and say, we have a faster consensus mechanism, but it really fractured the liquidity. So Canton kind of has one liquidity pool, even though you can think of it as many, many different networks that are connected to each other.
Gotcha. And I've seen the design of proof of stake holder. It seems like it's a little bit different than the regular proof of stake that like Ethereum and other methods run on. So why do you think letting only the people involved in a deal check and approve it help improve privacy and the ability to kind of grow that network and scale it like you're talking about without copying everything everywhere to make sure you're in line? Like, what is the difference there?
So maybe I'll flip it. It's not so much that the proof of stakeholder makes the privacy better. It's the other way around. It's kind of, if you start with a fundamental idea that piece of data should be private, and what I mean by private is like the people who need to know about it, and no one else knows about it. So if you think about almost any kind of interaction between entities, if it's individuals, if it's companies, there's a set of people who need, we have a contract between us, then, or if we and two other companies have a contract between us, all of those parties know that contract. And then the contract is something that is not known to anyone else in the world, unless there are provisions that say you may disclose this to your accountant, your legal counsel, and the like. So that was kind of the starting premise of how data should even be modeled on a blockchain, in our opinion. Now you can say, okay, now given that that's the case, given that we said, okay, there is privacy, there should be privacy. Privacy does not mean complete anonymity from everyone. It means that those who should see a piece of data should see that, and no one else should. Now you say, what's the simplest way to get consensus across that? And then you say, okay, now we really need only a consensus round for every single contract separately. So the proof of stakeholder is a consensus mechanism where we actually run a small consensus round on every single contract in the network separately. So, and that gives us a lot of like nice properties. If we have one transaction, I'm sending you, $20, and you're sending me an asset for that, some tokenized stock. And let's say even those $20, $10 are in USDC and $10 are in JP Morgan deposit coin. JP Morgan sees the JPMD move, and they know that I have the right to transfer that to you. Circle sees the USDC, and they know that I have the right to transfer that to you. whoever is tokenizing, whoever is tokenizing that stock, if it's GSDAP, that's the Goldman Sachs platform, they see the movement of that stock, but they don't see how much cash transferred hands. But proof of stakeholder is essentially a consensus mechanism which says within one transaction, we can have these multiple consensus portions on the different contracts, and each party only sees what they're supposed to see.
Gotcha.
Perfect. So one question that I have is, and I apologize if I get this wrong, but DAML is the smart contract language made just for financial deals involving multiple parties with clear rules about who can do what. How is it different from languages like Solidity on Ethereum or Rust on Solana? And what makes it easier and safer for complicated things like instant settlements and moving collateral around?
Yeah. So there are a lot of things that go into DAML. So DAML is the smart contract language for Canton. It won't be the only one in the future. So there are already people in the Canton ecosystem who are building ways to plug in a ZK EVM into Canton. But it is currently the smart contract language, and it is the preferred smart contract language. There are a few things that went into DAML, and first and foremost, if you start from this concept that every contract should be on a need-to-know basis to those who need to know that contract, then you need to bake in this concept of who are the stakeholders of a contract, who are the people signing this contract, and who are the people who may not be signing it but are observing the contract. Maybe your tax software needs to see all of your transactions,
or regulator.
Or regulator, but they don't have the right to make any kind of decisions, controlling decisions over that contract.
Gotcha.
So DAML, the first thing about DAML is just it ingrains into the smart contract. It says at the smart contract level, we're saying every smart contract, who is allowed to see this, and that's kind of a fundamental part of the data model of that smart contract. Now, other than that, we just put a lot of we have a lot of folks in digital asset who come from software security backgrounds. So we put a lot of features into saying the developer shouldn't have to work on security features. So if you look at most blockchains, they're very, very low level. Like pass this message from here to here and hash this thing and sign this thing. That's the kind of thing that application developers typically are not very good at doing in a safe manner. Not because they're stupid, it's just because that's not their day job. They're not security engineers, they're application engineers. So in them, we try to keep it very high level, and not to say how to do things. It's what we call a declarative language, where we say, this is what I need to happen. I need to transfer $20 from here to here, and I need a stock token to move from here to here.
Right.
Hey, protocol, take care of all the heavy lifting. The protocol takes care of the message passing, the hashing, the cryptographic operations. So it's also DAML was we created it to make a developer experience that's very easy and most importantly very, very safe. It really avoids most of the common pitfalls that that developers make in other smart contract platforms.
You mentioned global synchronized, and I was hoping maybe you could just kind of walk us through what the global synchronizer essentially does, how it has different parts of the network that talk to each other and move assets kind of securely, but still keep those tight controls and regulation measures. You're dealing with like treasuries, you're dealing with stocks. How does it communicate to make sure that it's doing this in a secure fashion on the global synchronizer?
Yeah, and this is where Canton kind of differs a lot in the underlying architecture from other blockchains. The consensus in Canton is really happening. Like in most blockchains, you think about the miners and the nodes, and you kind of mentally think about the miners as this kind of heavyweight thing and the nodes as this lightweight thing. And Canton kind of flips the script and says, the validators are the important thing. The nodes that the individuals or the companies are running, that's the important thing. The consensus happens between validators. But now we need someone to ship data around between those validators, and to kind of say which message came in, sooner and which came later. So to kind of timestamp things. So the synchronizers, I think about them as this kind of lightweight process. And a lot of times we give the example of the post office. I'm writing to you. I see the data. You see the data. We put that in an envelope. We give that to the post office. They make sure it gets from me to you, and they put a timestamp on it, and they make sure that it has the stamp, the right amount of postage on it, and that's their role. That's kind of what a synchronizer does. It's there are many synchronizers on the Canton network. Synchronizers take packets from one node and they transfer them to the other, and they help facilitate the consensus. Now, I think of the global synchronizer as kind of this de facto town square. You don't need to connect to the global synchronizer to be connected to the Canton network, but it is de facto the place where most nodes are connected to it. And I'm saying now, if you think about DeFi, you don't want networks to be in isolation. If Circle were to create USDC on Canton, it was completely isolated, and the set of nodes touching that don't touch, the nodes that DTC is running, then there's only so much utility. So, we kind of said de facto, if you want a place where you just know that all nodes are connected, connect to the global synchronizer, and there's no rule that says you must connect to it. There's no there's no enforcement of that, but it's de facto the place to go. And then we said, how do you pay for that global synchronizer? There's Canton Coin. So the global synchronizer is a decentralized synchronizer. It's not run by any one entity. There are centralized synchronizers run by specific institutions, but the global synchronizer is this decentralized entity that's being run by multiple nodes that we call super validators. It's paid for in Canton Coin. It's intended to be completely permissionless. There is a bit of right now onboarding because the network is still growing. But that's what the global synchronizer is. You can think of it as kind of a decentralized piece of software that moves the data from one node to another in order to facilitate the consensus.
Perfect. Well, one last question before we move into some tokenomics questions, but just to kind of wrap up this section, what are I know excuse me one sec. You've touched on a couple, but are there any other features that make Canton stand out from other blockchains that are trying to solve a lot of the same problems that you are?
Yeah. To be honest, there are a lot of features. Over 10 years, we've built a ton of stuff that is but it's the boring stuff. Yeah, no, it's the boring stuff that most people don't care about. So, if you're in a big institution, there is just a million different things you care about that, there's so many people who can say no to something and you need to check the box on every single one of them. So there's so many features that go into Canton to make it something that works for institutions at scale. But I'd say if I had to choose the big ones we talked about, it's privacy. It's the unbounded horizontal scaling, this network of network architecture. If you have a very high load and the global synchronizer is not enough for you at this point in time, you can spin up a new synchronizer and you can start routing traffic through there. So and that can continue forever. So it's this kind of this architecture that allows you to horizontally scale. And in the long run, I think that is actually the most important feature of Canton. But the meme these days is privacy, and that's what people like to talk about at this point in time. So
yeah, but scalability is going to be huge, especially for compliance. As regulations change, in different jurisdictions, that ability to be able to scale is going to be invaluable. I mean, it's going to be required.
Yeah, so. Yeah. Canton is also just built in a very defensive way. We kind of assume that shit will go wrong because in any software system, in any system, shit goes wrong. And when exactly, whatever can go wrong will go wrong. So it's just been built in a very, very defensive style that also allows you to really understand what happened and gives you the most ability to try to fix things as they happen. But there are a million different features that go into that, but that's part of the ethos, I'd say, that kind of has always led us throughout developing Canton.
Well, when we originally found it, there's some aspects about the tokenomics and the actual coin that made my ears perk up, right? I think the first thing I saw is the no pre-mined coins, and then also those weren't given to the team or early investors. As close to a fair launch as I've seen in a long time in crypto, and my soul is tired from these insider slow releases, slow slides downhill in crypto that I'm used to seeing. But people worry about the supply, and rightfully so, being unlimited, right?
Yes.
There's an unlimited supply. Can you kind of explain in simple terms how using the network plays into if the coins are burned or the minting of new ones based on that activity? What is the equilibrium that is built in, and how does that kind of impact the long-term outlook of the token value?
Yeah, maybe I'll start with a few things. I think a lot of people who ask us this are actually not aware that a lot of chains have an unlimited supply. Ethereum has an unlimited supply. There's inflation and there's burn, and in theory, inflation can go to an unlimited amount. So there's the theoretical unlimited, and then there's the practical bounds. one of the things that was always important to us, like we want to do things right from a 30-year time horizon, not from a 2-year time horizon. And we want to build in the incentives in the right way for this to be a thing of value, for people to really use this, not just for speculative purposes, but really for to create real value in the world and real products, real services. So that was kind of a guiding principle for us. And we had a business. We were running a very good business and getting licensed software before we went public. So it's not like we needed a pre-mine, and we really wanted to launch it the right way and a way that would be that everyone would feel comfortable with. Like just to remind people, we launched a public network under the Biden administration in the U.S. as a New York company. Gary Gensler as the SEC chair. The foundation is a U.S. foundation, a Delaware foundation. So none of us wanted to go to prison. We wanted to do this the right way, and also we wanted to show, we're so confident that we're doing everything the right way that we are doing it in the U.S. in the most unfavorable administration possible, and that's fine, because if you're doing everything right, then that's absolutely fine. And as a fundamental kind of ethos thing, founders and teams and companies should be rewarded for the stuff that they do, not the stuff that they say they're going to do in the future. And I've seen so many people get rich quick by, creating a coin, taking founder tokens, promising the moon, then saying, "Oh, it's not a securities offering. I'm promising something, but no, it's decentralized." And it's not the way we want to live our lives. I want to get rich slow, not quick. Like I want to get rich doing things the right way. And if I create value for the world, then at that point where I've created value for the world, then I should be rich. But until we've proven that we've created value for the world, I'm not deserving of just dumping a token on someone else. So that's kind of just we're very confident in this way and did that. And now I don't want to sound like all altruistic. We were earliest to the network. We know that we were on it together with some of our customers and other people. We did announce it almost a year in advance, so that kind of like Satoshi, anyone who wants to jump on it can jump on it. But Satoshi mined the first million Bitcoins, or not the first, but 1 million out of the first coins, and we've mined a lot of the Canton coin, and we continue to be a very active participant. And we're building applications that people want to use, and we're getting application awards ourselves from those applications. So we continue to build infrastructure and applications and to mine their awards ourselves, and that is how we digital asset get paid. But there are other companies on the network who've been around from day one of the network, and they have about as much Canton coin as we do, because they were just very active and jumped all in on creating stuff for the Canton network. So that's kind of how we thought about the pre-mine. And then with the tokenomics, we had the benefit of launching later than everyone and seeing what works, seeing what doesn't work. And one of the things that always surprised us that if you look at very successful networks, take a look at Visa and MasterCard. People think they're taking a huge amount of fees, but Visa's taking, I think, like 0.2% of fees. They're not taking the 3.5% of fees that merchants pay. What they really got right was the incentive mechanism. So, all the Visa fees are getting plowed back into the system through they go back to the merchants, they go back to the acquirers, and in some form, there's then a competition over the users. And when I pay with a credit card, I get 2% cash back or points or this or that. So they got the incentives right for their ecosystem to want to onboard the users and the merchants, and kind of mimicked something very similar in Canton. Said, the people who really bring the value to the ecosystem, in the early days, you need the infrastructure. So in the very early days, you want to incentivize that 0-1 infrastructure for coming. But in the long tail, you want to incentivize the people who are bringing the users and the people who are building the products and the people who are bringing the services. So that's why the bulk of the app rewards over the long run go to those people who are onboarding the users and the app and the products and the services. And that was really important for us. And we wanted to get that right, and it took us a lot of time. I'll give credit to my co-founder Eric, who did kind of the big bulk of designing the incentives and tokenomics to get it right. And we've had also just many discussions before launching this with the stakeholders to see that this works for them.
Well, and that's something that really drew my attention about Canton, was the way that that you incentivized builders and people that are actively using the chain to onboard more people. So like you mentioned with the tokenomics, with the more network usage, the all the fees are burned. I mean, I just looked before we went live, and I think it's like $1.6 million today was burned, and that is burned, gone. And
Yeah.
there is tokens being minted, but there's also built in a halving over time to where less and less tokens are being minted. So that equilibrium that Drew brought up before, I just want to make sure people understand that
Yeah.
as the network use increases, the burn rate increases, and over time there's less tokens being burnt. So at some point they become equal. That's equilibrium. As network usage continues to increase, it potentially, not guaranteed, but potentially could become deflationary. Am I correct in that?
Yeah, that's correct. So I actually didn't answer. I realized I didn't answer Drew's question before, but the idea, which I would love to take credit for it, but actually the first time I saw this
we won't tell. Go ahead and take credit.
So I think it was 2014. I met the founders of Factum. So Factum, I don't think anyone's heard about it, not around anymore. But I remember the moment they were explaining to me, and then I read the white paper, and it was just beautiful. This idea of how do you get market forces to get the price of a coin to be the correct price. And we really wanted to say, we were trying to think, how do you get the value? Like, we're talking about a utility token. So the utility token's price should track the actual utility that it's providing. Saying, how do you get the price of a token to actually track the value that the network is creating as decided by the users? So the mechanism is that if a user wants to use the Canton Network because it provides them real world value, then they have to pay to use that network, just like we pay internet fees. So they're paying right now, it's $60 per megabyte. So you can buy like some number of transactions that you get sequenced on the network for $60. That is denominated in US dollars, not in Canton coin. So now, as the price of Canton coin fluctuates, if the price goes down too much compared to the real value, to the demand of the network, then to get to $60, you need to burn many more coins. So if the coin price is 1 cent, then $60, that would be 6,000 coins. So you're burning a lot more coins. If the price goes out of whack, if it goes too much down, then you're creating deflationary pressure. You're forcing coins out of circulation. But the other is also correct. If the price goes up too much, then in the long run, and in the short run, you're always going to have speculation, you're always going to have price shocks. But in the very long run, if the price goes up much more than the network utility, then now, let's say, a coin gets to $60, then to use 1 megabyte, you're only burning 1 coin. And then it causes inflationary pressure because more coins are being minted all the time, and you're only burning 1 coin instead of the 6,000 coins that you were burning yesterday. So we really got this mechanism that's self-correcting based on the dollar value of fees that people are willing to pay to use this network. So
I'll be honest, it's working, because the price since launch has been amazingly stable.
Yeah. And if I'm a retail person, obviously there was no advertising to retail, and that was another shocking thing about me to see Canton's rollout is like, we're here. You can get on the boat if you want or not. I don't care. We're not advertising to you. It doesn't matter, right? Like, I wanted to ask you this, like, as a retail investor, like, what long-term incentives can be found by holding the Canton coin? Is there any, kind of Canton protocol mechanism, built-in mechanism that directly returns value to the token? Or even the people holding the token? What mechanisms kind of drive and house the value there?
Yeah, first of all, I'll say I'm not sure it was the right approach, definitely to necessary to go and kind of just say, it's here, and if you want to hold it. But that's a bit of just our culture of like, build things.
I respected the hustle. I gotta say, I respected the hustle.
Like the hot chick at the club. You come to us, we're not coming to you.
Well, we're confident in what we're building, and I'm a net buyer of Canton coins, so I'm not that sad when the price is low. So the mechanism, first and foremost, is we want to align the people who are holding the token with the network value. We're very actively saying, if you're just coming to speculate on a coin and you don't believe in the network, and we're saying, hey, if you don't believe in the network, the coin will go to zero. if you think the network will not get used, then in the long run, the coin will go to zero. You should not hold it. And we're actually trying to align people. If you want to be a token holder, you should do it if you believe this network will succeed. Again, in the long run. In the short run, it's always going to be trading forces and speculation forces. So why is the price stable right now? Why is it 11 cents or 14 cents? Or I honestly don't know. I'm not a trader. My co-founders are traders in their past, but I never know. Like, people always have reasons, because Trump did this, because Iran, because so I don't know why the price is at a certain point where it is. But if you just look at the market cap of Canton compared to others, and if you look at who's using Canton and at what level they're using Canton compared to others, it's out of whack. It's completely out of whack.
Yes.
So I don't like advertising the coin. I don't like talking about the coin price. I don't like even family members ask me, should I buy? And I always tell them, I don't know. My family members are pretty pissed at me at this point for never being willing to answer a price question. And I've never answered a price question about Bitcoin or Zcash or anything I've been involved in. And then they're very pissed at me about the Bitcoin one. But if you look at the caliber of people who are using it, what they're using it for, what they're talking about using it for over the next few years, and you compare this to other networks, to like payment networks and settlement networks, and just the amount of fees that are going on those things. Already, just with the activity that's happening today in the world, if a small portion of that moves to Canton, that is huge. But I also like to quote Toby Luca, the CEO of Shop. When they started, people didn't imagine, people look at his company at Shopify compared to the TAM of internet sellers at the time. What they didn't realize is that if you remove the friction, the TAM increases significantly. And that's what I think we're going to see in crypto space, in blockchain space. Every time you remove friction, and every time you make it easier for individuals and not just institutions to join something, you're going to get a much, much larger economy. So I believe the economy of clearing, settlement, collateral, payments is just going to grow a lot more. And I believe Canton will get some portion of the fees. Giving the Visa example, they only take 0.2%. I think most of the fees are going to go to the application providers, the service providers, the product providers. Canton will take a small portion of that, but that small portion, I believe, can be absolutely humongous. So, and time will tell. I don't really know if that's going to happen or not, but that is the conviction and the belief that we're working on, and some of that value is going to go to the network, and the network really means it goes to the token holders. Other than that, there are some discussions. We don't control Canton, so we did not bake in things like staking into the network. But I know a lot of the people who participate in the governance are starting to talk about staking and things like that. So I do believe there will be some mechanism in the future, but that's not something that exists today. And I prefer to talk about things that exist today. But that's kind of the current state of things.
Well, it's like you're reading my mind. The next question I had was, me personally, and a lot of people in our community are using the Braun wallet. It's the first place I found that I'm able to earn, because I'm big into DeFi. So it's the first place I found where I could earn Canton token. And so I'm using that. So what kind of extra DeFi features or opportunities are in the works right now, to where people like myself might be able to you said that there's some governance ideas that are being tossed around, but what is some DeFi plays that you know about that you might be able to share with us?
Yeah, I mean, to be very honest, I've completely lost track. There's so much happening that I'm not following everything that's happening. But there are there are people working on dexes, on dark pools, on pretty much everything you have in the public chains these days. Someone is building those things, and usually multiple companies are building those things on Canton. So I say, like, if you follow the Discord, if you follow the Telegram, if you follow the Slack channels that people are using, there's just so much happening that I've completely lost track of those. But all of those things are lending protocols, wrapped Bitcoin and other currencies. So all of these things have been coming to Canton and are in different levels of completion. So I think all of these opportunities are going to be around in Canton over the next 6 to 12 months.
Are there any DEXs that are going to be launching for retail?
Yes, I don't know if they've been public about these things. I think they have, but yes, there are things.
It's a good season for that. It's interesting timing. The DTCC information, right as I'm starting to see kind of 24/7 trading in the stock market be more hard-soddedly discussed. Recent big news with the DTCC planning to tokenize these US treasuries, right?
Yeah.
And possibly even stocks on Canton. There's a target of 2026 for this, but do you see the Canton Network token itself finding a role of usefulness as we see all of this real money grow and the volume begin to flow through the network?
Yeah, I mean, the utility of the token is to use the network. So I'm sure it will be used. It will be more accepted, as collateral and for various different things. As it gains popularity, as it goes up the coin market cap charts. If and when it goes up, it will have a lot more utility. But today the utility really is as the the gas token of the network, the thing that you use to use the network.
Hmm.
So I somebody in the chat was actually just asking, the way that the Canton network works is, you have the super validators and the validators, and that's kind of building DApps on the network, and those nodes or those validators, they earn as well. So is there any way you could summarize how, if somebody out there is interested in building on the Canton network or becoming a validator, what's the easiest way to do that?
Today there are various channels, but pretty much the validator onboarding, there's right now a bit of a wait list. Again, the thing is, right now, with the amount of value that's already transferring, institutional value that's transferring, the opening of the network is gradual. We actually did not anticipate that it would grow this quickly and be kind of known this quickly. So right now it's just kind of people are being onboarded at a pace, but pretty much anyone who's come and said, I want to build this app and it's a real app, and I'm not here just for the rewards and just here for the the yield farming or liveness rewards and stuff like that. They talk to the foundation through the various channels, again, Discord, Telegram. They get prioritized and they get a validator. Other than that, most people don't actually host their own validator. Most people would prefer to work with the existing node as a service providers. So they go through the Kilns of the world and get a node and start building an app. I mean, you go to the docs, you start reading how to build an app, and you go ahead and do it. It's kind of pretty easy onboarding experience from that perspective. It's a bit of a mentality shift because of privacy. So it's a different smart contract language. But other than that, we've seen people who've moved from crypto and very quickly brought apps to life.
And I know you mentioned it's hard to keep up with everything being built, and things are escalating quickly, as we can see. But if you had to pick a few, or maybe just one, what app or project or even partnership are you personally finding the most excitement about as things begin to grow?
I think the various stablecoin partnerships are very interesting to me, and the reason I just believe that stablecoins have the potential to grow. When I say stablecoins, I mean any cash-like asset. So stablecoins, tokenized deposits, tokenized money market funds. If crypto has proven one thing, it's proven a few things, but one of the things it's proven is the demand for just the demand for dollars, demand for a cash-like asset that you can hold, you can transfer freely. And I think it's been held back significantly by the lack of privacy. So the amazing thing is the fact that it grew so big without having this fundamental property of privacy is huge. And if we look at all of the stablecoin today issued, compared to the amount of to the size of bank transfers that happen today, and correspondent banking, in treasury management inside of companies, in remittances, in payroll, is just it's huge. I think that opens up a huge opportunity. So I think that's just one of the biggest areas, and I think it's going to completely change the wiring of kind of the structure of financial markets. Another one, something we call the global collateral network, which is not one network, but it's just, if you look at the amount of assets that people have that are being used as collateral today, it is a very, very small portion of actual assets. And this idea that comes very natural to us in DeFi, but is not that natural in the financial world, is that like, I want to be able to use any asset I own anywhere and be able to pledge it anywhere else.
Yeah.
And that's something that really, the thing that's been holding us back is just how the financial plumbing, the IT systems that don't allow this kind of interoperability between things. So we're seeing a lot of companies very interested in bringing their assets on chain, and that's the likes of DTCC and Broadridge and many others, and LSEG recently did something with us. So I mentioned like life insurance policies, loans. There's so many different assets that companies own, that people own, and the ability to take those things and pledge them on chain in a way that you can actually get loans from other entities, and they have the full backing of that asset, and they don't have to really. It's not so much the risk of who is my counterparty; it's the risk of the collateral. That is just a huge thing. So I think those are the things that in the short term get me very excited, like in the next 12 to 24 months time frame. And then longer term, I think there are many more things. Some of them are completely out of the financial realm. I actually think these kind of networks can be used for a lot of things outside of finance. But inside of finance, just like we have stable coins that give everyone access to something they didn't always have access to, US dollars, I think we will have these tokenized representations of assets where you may not be actually holding an equity that's custodied at a qualified custodian, but that anyone in the world would be able to hold a token that represents the same economic value as that equity. Maybe it doesn't give you the voting rights, maybe it doesn't give you other rights that an equity gives you, but kind of like a stable coin is gives you the financial exposure to US dollar. I think we will have this this reduction of barriers where retail does get access to the same types of financial products that today only people in the US and high net worth individuals have access to.
I'm glad you bring that up. Accredited investor, kind of barrier for a lot of us. And I'm glad you touched on that, the power of tokenizing illiquid assets. So a lot of people don't understand that, a lot of the wealthy, a lot of these, businesses, they operate off debt. So, being able to have things tokenized to where they're liquid and they can be used as collateral, for loans, because they don't have to pay interest or taxes on debt. So having these vehicles to be able to access that liquidity to grow and scale and hire more people and buy new equipment and things like that, it's very important for a business. So I don't think people understand the depth of importance that RWAs, the value proposition that RWAs have for not just businesses and institutions, but us as the individuals. You can tokenize your house. You don't got to go to a bank to get a loan and get approved and things like that. If your house is tokenized, you can put it out there on a DEX and people can, invest in it. You get that liquidity to use. Of course, just like a regular loan, you can get liquidated or foreclosed on, but it gives you much more flexibility with your asset. So I'm glad you brought that up, sir.
Yeah. Yeah. I mean, by far the easiest asset to get a loan against in the world, in my opinion, is Bitcoin.
Yeah.
There's no asset that's easier to like right now get a loan for any size.
You go on Coinbase, Ethereum and Bitcoin, and they use Morpho as the provider.
Yeah, and then if you live in the U.S. and you have a brokerage account and you're holding equities, then it's pretty easy to get a loan against that. Right. But that's not something that most people have, in the world. So I really want to see this future where there's much more just accessibility to these things. Now, of course, within the regulatory frameworks, I think the regulatory frameworks will adapt to this. But the demand is there. It's very clear the demand is there. The crypto markets have shown us the demand. A lot of times we give the analogy here of like the kind of Napster and BitTorrent versus iTunes. Like there were these years, we're old enough to remember, there were these years where everyone thought that, no one's going to pay for music anymore. Because, at least I was, a young kid ripping MP3s and downloading them. And I thought, like, why would anyone in their right mind pay for music?
Yeah.
I think we're the generation that kind of proved that there's demand for streaming music. But at some point, now I have a few gray hairs here, and now I like paying for music. I can get it for free, and I'm going to pay for it still because that's the right way to do it. And and so the kind of the crypto space, the very Wild West, showed us that there's demand, but it's also a Wild West. And I think we can do all of these things responsibly. And there will be a lot of regulatory arbitrage and jurisdictional arbitrage, and that's fine. There's competition between jurisdictions as well for business. But I want to see that future where there's much more competition on these things and much more access to these things, and people are innovating on these things.
Absolutely. So Drew touched on this a little bit, but I kind of want to drill in on it a little bit. But the DTCC, the news about using Canton for tokenizing assets was huge. Those that don't know, the DTCC has ties to the New York Stock Exchange, things like that. But just a quick question: who else, kind of at that level, is either building or currently launched, on the Canton Network?
Yeah.
Kind of what's the most watched crypto native projects or traditional finance that that you feel should be highlighted?
Yeah. For those who don't know, the DTC is the legal ledger of record of many assets, all of the equities in the U.S., U.S. Treasuries, municipal bonds, many more. I'm sure I'm missing a lot of. I think syndicated loans. So it is a huge thing in the sense of the just amount of trillions of dollars that they have on their books and records. So if you get those things to be legally represented on a blockchain, that's where you can actually pledge those things. And you can start using those assets in a much more DeFi manner as DTCC gets comfortable with that kind of with those kinds of workflows. Other ones are. I need to be just careful about the.
No.
I
I don't want you to make any mistakes. So take your time, please.
Yeah, and that's right. I mentioned a few of them. There's iCapital in the space of alternative investments. There is Eliox in natural gas and commodities. You have pretty much all of the large tier 1 banks who are doing tokenization platforms. Goldman, BNP, HSBC. Then I'm sorry, I'm being very careful with these names.
Be very careful. I totally understand.
Yeah, JP Morgan, deposit tokens. I'm personally much more excited also about the crypto stuff that's happening. Things like wrapped Bitcoin that are coming on chain. So this interaction between the different crypto assets and financial assets. LSEG just last week announced working with Canton. In the past, we've had the Hong Kong Exchange work with Canton, the Hong Kong Monetary Authority. So kind of across the world, you see there's central banks, and I can't name a specific one, just projects all around, pretty much moving to this technology.
Okay. Well, obviously there's been a lot accomplished so far, but what's next on the roadmap that's likely the next catalyst to bring more adoption to users and potential interest from institutions that would come on to Canton Network, in your opinion?
Yeah. It's just bringing on more assets. There's just at this point so much demand from like the asset issuers to come on chain. So it's just the hard work of helping them build their applications, bring them live, not try to boil the ocean, kind of bring it on and incrementally add more features. There are a ton of things on the roadmap in terms of, improving the scale of the network, moving things faster, but it's really around now onboarding the assets, onboarding the users of these different companies, and starting to help them do the interesting things that we know from DeFi with these assets.
Very interesting.
Nice. So let's move into kind of like the future of Canton. So my next question would be, where do you picture Canton Network in the coming years? 1 to 2 years, especially as bigger players get interested. A lot of these that you've already mentioned that are already live. All the different tier 1 banks, DTCC. All these different very very large institutions. Where do you see Canton being in a year or two?
Yeah, I see it just being the underlying plumbing that, maybe a year or two still people will be talking about the network itself, but it's kind of like, most people do not talk about the infrastructure of the internet or, Swift or stuff like that. So, maybe a bit more than 2 years out, like 5 years out, 10 years out, I think it's, I want to see it become the boring infrastructure that most people don't care about. They will know the brand name of Canton. That is important. That is important for the token holders. It's important for kind of like Visa. How many people know what Visa actually does?
Right.
Visa is a technology company that does the plumbing, but is a very, very well-known brand name. So, sorry, lost focus here.
It's like we want to eat the cow, but we don't necessarily want to know how the cow became a hamburger.
Yeah, exactly. I see the Canton Network becoming infrastructure for many, many more types of workflows and things that are very kind of, people are not really thinking about them at this point in time. But I see it really becoming the underpinning rails for global finance. That's global finance both across companies, but also within companies. The treasury movements of companies, like the day-to-day finance of people, being able to move. At some point when you move cash from your account to anyone else's account, that will be running on the Canton Network. It's just something that you're kind of oblivious to because you don't really care how bank IT systems work. Yeah. That's kind of the at least from my perspective, that long-term goal for, and even the goal over the next 1-2 years is to just continue that journey. I mean, it's already happening. There are a lot of users of applications that use Canton under the hood that have no clue that they're using Canton. And that's great. That's exactly how we want it, over the long run.
Well, it seems the rubber's come to the road in terms of banks and the DeFi relationship. Now, last week and the week before that, we obviously have been covering the Clarity Act, right? And Coinbase, slight dissent, a little bit of aggravation with yield being questioned. Should it be allowed? And we can argue till the cows come home. I have my own personal opinions about just protecting banks' longevity, and DeFi is quite disruptive in that process. But how do you think the Clarity Act in and of itself might change things for DeFi and RWAs going forward? Is there any glaring part of the Clarity Act that you have to hit the brakes on and reconfigure to make sure it falls within potential compliance? What are your thoughts on the Clarity Act?
Yeah, so I have to admit, it's been a very busy few weeks, and I have not had the chance yet to read and form an opinion on the Clarity Act. I can regurgitate the tweets that I've seen from people that I respect, but I like to form my own opinion before I go ahead publicly and say my thoughts about it. So I'll probably be tweeting about it like in the coming weeks as I get up to speed. But I'll give it's not what you asked, but I'll give a generic statement. I think we've talked to a lot of regulators over the years, and I think they are trying to do the right things. Like, it's not, a lot of people think about these as like these evil folks sitting in DC that don't understand anything, and I say there were some that fall into that bucket, but for the most part, I think there are intelligent people, intelligent staffers that are trying to do the right thing, and there are a lot of industry forces pulling in different directions. Now, of course, there's attempts for regulatory capture, but on the most part, I don't think people at large institutions are in any way thinking about how to keep back these things. And when you look at the generation of decision makers in financial institutions right now, it's people who kind of grew up into the crypto space, and most of them hold some level of crypto themselves, and they're not trying to slow down this industry. So, and there are kind of opposing opinions on how things should happen, but specifically to the Clarity Act, I thought the Genius Act was very helpful in giving clarity to people, and we saw a lot of hesitance over the years of financial institutions that would say, oh, we can't do these things because of regulation, and they could not point to a single regulation that said why they can't do these things. But there was just this kind of feeling for the last few years of, it doesn't matter if there is a very specific regulation or not, but someone's going to find us with some regulation. That's gone away recently. And I think it's both, the approach of current administrations, not just the US, to just giving a sense of, you're free to build, go and do things. And we're not we're going to try to weed out the bad players, but not try to hit the good players. And then things like, Genius Act, and when I get to the Clarity Act, I'll let you know what I think about that. But of coming and saying, we're not going to do regulation by enforcement. We're going to tell you what you can do and what you can't do. And it doesn't matter if you agree with these things or not. The clarity is much more important than the actual specifics of what these acts say. It's about now the guardrails. Now you can work around them. Now you can work within these guardrails, find the ways to do things. So in general, I've seen kind of I'm very optimistic about the way regulations are going in general, without knowing the specifics of Clarity.
Absolutely. So, I mean, that's kind of the high points that I was wanting to touch on. And I mean, if both you gentlemen have a little more time, I wouldn't mind just doing a little bit of kind of free flow and just touch on things that we all are curious about that maybe I didn't come up with in the questions that I generated. But Drew, do you want to kick us off?
Well, I mean, essentially, I think we touched a lot of the more pressing questions. This last few years, there's been a definite awakening, I think, from altcoin holders that have been basically holding coins that were heavily pre-mined, held by VCs, and slowly bled out on the market. And there was no real excitement to cover up the fact that those things were being sold on the market. There was no fun being had. So a lot of people have essentially checked out right now. And a lot of people thought I was nuts for being interested in this thing at the time frame. I think where we are right now, to see Canton just plow through the price action like nothing's going on externally. Well, I mean, France has been looking, Trump's like, I'm going to do 200% tariffs on France now, and the champagne. Bitcoin loses its mind.
Right.
Volume's up on Canton. It's upside down world, and I look at this thing. I'm a utility investor. When Vet showed me this, overall assets, I really wanted to just touch on one thing in the ecosystem side of the website. It's canton.network/ecosystem.
Yeah.
And it shows explore the Canton Network ecosystem, and there's $6 trillion plus on chain, $4 trillion of monthly, and $300 billion in daily repos. So, I wanted to get your opinion on what does this mean? Does this mean that there's going to be $4 trillion worth of repos happening on Canton Network, or is this just counting the repos that are happening in general? Like, where is this data coming from?
So this is the data that we know of. So again, I want to be clear, there are a lot of companies using Canton that are not disclosing what they're doing and the volumes that they're doing. And that is, part of the double-edged sword of Canton with privacy. People can decide not to disclose their data. And one of the things that we're trying to do, I think we, both digital asset and the Canton ecosystem, is we are trying to convince a lot of people who are using Canton to actually publish the data of how they're using it. And I think there's a lot of old habits die hard, and they're not used to disclosing data. But that is one of the things I hope we'll see over the next year, is many more people who are using the network explaining how they're using it. But all of this is the activity that's actually happening on Canton, as disclosed by those who are doing it. Again, this is where we are relying on application providers to decide if they disclose what they're doing on Canton or what they're not doing. I'd say there are probably more people who are on Canton and not disclosing their activity than there are those who are disclosing at this point in time.
Are there any data points such as the the daily fees that are burned or anything like that that do include all users, or is it just across the board that they're able to not disclose any data whatsoever?
Yeah, not at this point in time, but there's a lot of discussion at the governance level in across the super validators, across the Canton Foundation, around how do we incentivize people to make all of this visible. So right now, there's a lot that's not visible, but we want to bubble up at least the aggregates so that people know what's actually happening, see all of the burn, and it's again, we're in the transitionary period. So we talked about 2 years down the line. That's maybe something I missed and I should have said. I think in 2 years down the line, it'll be much easier to see all of the activity, not just the ones that are right now, kind of the disclosed activity that people are choosing to show that's happening.
Because I got to be honest, I'm kind of I'm into data porn. I love the just going over data and looking at the numbers, because to me that it makes sense. With Canton, when I first saw it, the first thing I did is I started, because I saw it on rwa.xyz. First thing in the morning when I log on, it's one of the first places I go for DeFi and RWAs. DeFi Llama's the other one, and then of course Canton on the tie is a place where I go to see the daily fee burn and things like that. But that's how I like to, like Drew. Drew's a utility investor as well. I don't care about hype. I don't care about mind share, social media posts. I don't care. I want to know, what are you building? What pain points are you addressing? What real world problems are you solving? And, and how does that translate to token holders? Because otherwise, why, but if that value doesn't transfer to token holders, there's no point. It's like holding a baseball card of your favorite athlete. They're making a bunch of money, but are they paying you for holding their card? No.
Yeah, I fully agree. I'm kind of in the same mindset that I want to see what's happening. I want to see what's real. I want to, we're in this, as I said, kind of transitionary period where not everything is visible at this point in time, and that's kind of how the network started. And but again, I'm pretty confident that we're actually going to be able to show and demonstrate everything that's happening. But as I mentioned, kind of old habits die hard, and if you're to go to JP Morgan and say, hey, can you just disclose all of the, how many internal transactions are going on between Chase customers, they're not really used or incentivized to doing that. So you need to make it kind of financially work for different application providers to say, hey, we're actually going to let you know what's happening on this application, and give more transparency about the aggregates. We're not asking, it is fundamentally a network with privacy. We're not asking people to disclose what the transactions are, but we need to incentivize them to disclose the ways that how they're using these things in the aggregate. And we need to make sure that as you said, that value, that any value that that the users of the network are deriving, that some of that value goes back to the utility and the token holders of that utility token.
Absolutely. Yeah, this is it's a time frame where people are used to meme coins pumping. That's dead.
Yeah.
Right. I think we in crypto, it was aggravating seeing the meme coin season, and yes, I dabble because I'm a DJ, but most of my stuff's in Bitcoin, and I liked Chainlink. I see Canton, I liked it. Do you think that we've finally seen the death of crypto feudalism though? Now that meme coins have seemed to go quiet, is that coming back, or is it just
I don't know. These things are so hard to predict. I think anyone who tries to predict them is bullshitting themselves before anyone else. It's like, you think they're so dependent on, like, if the Fed pumps money, liquidity into the system, we're going to have another meme coin cycle. It's so hard to know what's going to go on. I think we're past peak hype of like meme coins and altcoins and stuff like that. I think people are really looking right now to see what's real. There's a lot of fatigue. I wouldn't rule out that it would be like another kind of meme coin craze, but I think the hype cycle has moved on to AI and robotics and synthetic biology and launching rockets to the moon, and now people want to see, okay, what's really happening now that we're 15 years into this thing, and I think we're at that point where it's really the real value is what people will care about over the next few months and years. I was early into the crypto space. Around 2015, 2016, really started kind of tuning out of the broader crypto ecosystem. But I really disliked a lot of the meme coin, the pumping, the founders, paying themselves. It kind of felt like, when you read the book, The Big Short, you kind of feel like all the mortgage bros have moved on to crypto.
A self-licking ice cream cone.
Yeah, exactly. It's kind of
gets weird. It starts feeling weird, right?
It's a little incestuous.
Yeah, so that's why I started kind of really tuning out of. As I said, I never checked the price feeds for anything. I started tuning out of the market, and I'm starting to feel like, again, the market is becoming a bit more rational, a bit more focused on what are the real things that are happening, and not what's the next ape coin that we can get Elon to tweet about so that it goes up and we're going to pump it, we're going to dump it on everyone else.
Absolutely. Wise words. Well, this has been a really insightful interview. You're building something that, it's been pretty shocking to see. It's not just survival, it's thriving right now as the rest of the market is just trying to survive, which is very, very interesting for me to see. Shaul, where can people keep up with all of your work? Do you use Twitter the most often, or where can they keep up?
I mostly use Twitter, probably on Twitter more than I should be for my sanity, but I'm there. So I'm at Shaul Kfir on Twitter, and then the ecosystem is very active on Telegram and Discord. But for me personally, that's Twitter's the main place.
Well, we'd definitely love to have you on again. If you're open to it in the future, because the way that the adoption you're getting, the traction you're getting, the investment that you're getting, I don't see Canton going anywhere. And so I definitely would like to kind of keep my finger on the pulse of this as an investor, but just also as somebody that's trying to educate the public about these projects, and trying to help people find good solid projects like this. And I'm not just saying this as a token holder, but it just so happens that I like to invest in solid projects. But let's definitely let's talk again.
Yeah, I'd be happy to be on again as things develop, and how as more things come online and the market matures.
Absolutely. Look at it. We have the stages of progression of bearded. Right?
Exactly.
Great.
We got
Love
Drew started it, and then it moves to Shaw, and then there's the if you live in the woods too long, you end up looking like this.
Hey, it is what it is. It is what it is. I appreciate you, Shaw, a veteran, for putting this together, man. Everyone that's watching this, repost the show. This is the information people should be listening to, rather than sitting there white knuckling these altcoins from yesteryear, hoping the insider doesn't choose more violence on you moving through this year. Go learn about some things that are actually providing value. Right? That's what I think is really good about this. So shout out to you guys for putting this together.
Yeah, this is great. Shout out to anyone who made it, who had the attention span and made it this far.
Oh, absolutely. No, and we understand, that it's, got kind of technical. If you want, our Discord, if you want to sign up for our Discord, I'm more than happy to break it down. We'll be talking about this moving forward, because this was very educational for me. So now I'll be able to, articulate, kind of what it is we talked about. But, again, thank you all for tuning in. Thank you, Drew, for helping me out with this interview. I greatly appreciate it. And thank you, Shaw, for taking the time and educating us, Canton.
All right. Take care, fellas.
Everyone.